Well, good morning. It's February 4th. I'm going to talk a little bit about the crop insurance changes that are most pertinent for this 2025 crop year. This is not exhaustive, but it's to maybe help answer some questions on where we're at with prices. I'm getting a lot of questions on alternative crops to cotton and stacks. Everybody's wanting to know about stacks. So we'll talk a little bit about stacks and then maybe a couple rule interpretations, but I know you guys want me to keep it short. We've still got our farm meeting coming up this Thursday in Florella, the following Thursday, February 13th in Selma. And so we'll be at those two locations. You'll get a text from me, but we're going to just jump right in. We did the meeting last week at Atmore for the farmers in that part of the state, and they said, well, what does 2025 look like? And so the best summation I can give you on 25 versus 24 is this. If you are pretty sure you were broke in 2024, I'm pretty sure we're going to be broke again in 2025. So that's pretty much what you need to know, but we'll be a little bit more specific. It looks like we're going to get our Farm Act money in March. I'm hearing the date of March 15th. It may be a little bit sooner, but it looks like that's going to come through. It's not going to fix it, but maybe it'll slow the bleeding just a little bit, and we'll publish the prices that they're talking about. Low 80s on cotton, high 70s on peanuts. Corn qualifies somewhere in the $40 range as well. Nothing's been sent out to FSA yet. There'll also be, from what I'm hearing, a 2023-2024 crop insurance disaster through FSA, but that has not been written, and they don't even expect to begin writing that program until the end of April. So it's not going to help us in the meantime. But we're going to jump right in. Give you an update on today's prices. Discovery price for cotton has fallen back to 69 cents. Now remember, that's mid-January to mid-February of the October futures. So it was hovering at 70, but I'm not thinking it's going to be a whole lot different than the 69, 70 cent range. Remember with seed, about 13, 14 cents on top of that. So that's where we'll be on cotton, quite a bit different than the 82 cent we started out with last year. Peanuts right now running 491 a ton, corn 463, beans 1055, and I have had a lot of interest in grain sorghum over the last week or so, running at 462. Now remember, we change this every day that these commodities are traded, but it will finalize mid-February. So we'll have that solid by then. But just to give you an idea of what we're looking at, everybody knows the prices are lower, but that's what they're averaging as of today. Probably the most number of calls I've gotten over the last month is, hey, is stacks going to help me in 2024? And so I've had this conversation with so many people, I can kind of do it really quick for you. If you'll look down at this stacks 2024 slide that we're fixing to put up, this will tell you where we're at in just about every county of a producer that'd be watching this. You'll see what your 2024 expected yield was in your county. Everybody's on 90% level stack, so 90% of the expected yield. The one here you'll see highlighted is Escambia County, Alabama, 827 pounds, 90% of that 744 pounds. But you see out to the side, 847. Well, what does that mean, 847? And how does that tell me if I'm going to have a stacks claim or not, or if it's going to be a stacks payable year or not in my county? So remember, we started out at 82 cent cotton, and harvest price fell to 79 cent in 2024. So we had a 13.8% decline in price. And so remember, with stacks, not only are we looking at 90% of the traditional average in that county, if it falls below that, then we would have a stacks claim. So in this case, if you look at that one as my example, 743, if the price didn't change, would have triggered a stacks payment in Escambia County. But because the price fell so much, we got to figure that into it as well. So the new trigger yield would be 847 pounds for Escambia County instead of 744. You say, well, why the difference? Because we've got to figure how much price change there was on the cotton crop to see if stacks is going to pay. And so what does that look like? So if the county picked less than this 847 pound, it'll trigger a stacks payment in that county. So if you look at your county on here, you find Autauga County, let's just say 841 pounds. Multiply it times 1.138, and that'll give you the new trigger yield. You say, okay, well, that sounds good. Looks like we have a better chance of having a tax claim. How do I know if it's going to pay? Guys, it's going to be the end of June, 1st of July before we know, because we have to know what the county as a whole picked, okay, to see if you come in less than those triggered pounds. So end of June, 1st of July is usually when that's announced. I've seen it as late as August, but I think last year it was June 30th that they finally came out with the numbers. So hurry up and wait. My guess is, this is how I would suggest you answer the question. Did my county pick better cotton than it would in a 10-year period on the average? Some counties may have picked really good cotton, but I'm gonna say probably most didn't. Most picked average or just a little below. So I feel like we're gonna have a good year as far as stacks payment. Well, what did we give up to take stacks? Well, a 2.3 cent projected PLC payment on cotton, and we still don't know that that's what it's going to end up being. So I really don't think we risked very much. And for those of you guys that went from hurricane coverage to stacks, because stacks has paid back so many more times, unless you're in just a few areas, we still made a good choice. So Black Belt, everything in West Alabama, Mississippi, all those counties would come out better because there was no hurricane in those counties. So I still think we made the right choice. I still think stacks is going to be the way to go in 2025. They're only projecting, even with 69-cent cotton, they're only projecting a max payment of 11 cents, and it's never averaging out to be that anyway. So we'll go into that a little bit more in the in-person meetings, and you're welcome to attend those even if they're not in your area. So 2024, I tell you what your yield was, and I show you how to figure the new trigger yield. So just keep that in mind. It's on the slide. I can email you this. I can text you this. Just a short, brief overview of what that looks like. So as we move forward with stacks, here are your 2025 stacks numbers that correspond to those same counties. You say, well, my county went up or my county went down. Remember, the stacks yield is on a true number. It's what's been truly certified for crop insurance in those counties. And so it runs 1 year behind to figure the average. So some counties have gone up, some counties have gone down. So you just have to look at your individual one. The new expected yield, 90% of that's what stacks looks like. And so I put the trigger yield outside it. Remember though, that's the 2025 stacks. And with 2025, if we're gonna keep stacks, remember, no ARC, no PLC on your FSA sign up. You've got until 3/15 to sign, either opt in or opt out. It doesn't matter if you keep the other ARC PLC in place on the other crops on that farm, but you have to deselect or come out of the program on the upland cotton to qualify for stacks. And so if you forget to do that, there's actually a stacks penalty. You're gonna pay a percentage of the stacks premium and have no coverage. So we don't want to end up with that penalty. So remember, with stacks, no ARC, no PLC, and there's your 25 numbers. So the next thing I want to talk about just briefly is for the last, goodness, I don't know how many years, over 10 years, I've always suggested you guys just stick with YP on peanuts because there hasn't been enough change in the peanut market for RP to really help us out very much. I see 2025 setting up a lot like the 2021 crop year, where that was the one exception. Right now, we're averaging $4.91 a ton on peanuts, but what drives the peanut price for crop insurance on RP is soybeans, soybean meal, wheat futures, and a couple of other oil crops. And so, having said that, if we come out with better than $4.91, RP would be a safer bet. And I feel like we're not gambling with very much. If you're an enterprise unit farmer, you're only looking at 50, 75 cent an acre difference. If you're an optional unit farmer, farm by farm by farm, obviously it's a little bit more, probably $5 an acre different than what you're used to. However, when you compare that to your 2024 crop insurance premium, even on YP, which is a little bit cheaper, we had a $535 or $537 a ton base price. And if we're looking at averaging $4.91 now, that will more than offset the difference in premium because our price per pound or our price per ton is not as high in 2025 as it was in 2024. So your net expenditure on crop insurance is still going to be less, even if we move our peanuts from YP to RP. It's going to be my suggestion for 2025, just trying to look ahead and read the writing on the walls and not leave a a penny on the table, I feel fairly confident that this is going to be the one change that we need to make in 2025 is going to be to change to RP on peanuts instead of YP. I feel like we've rode the YP quite as long as we needed to, and we probably saved over the last 5 years, 10 years, we've saved quite a bit of money and not really hurt ourselves. But everything is lining up, and the powers that be are kind of indicating that we may see this peanut price come up some for coverage because it's based on other crops besides peanuts. And so if you think the soybean price is artificially low right now, corn prices are low right now, and you see an uptrend, and I know that the new president may do great things for the economy, and if he does, if these prices go up, commodity prices go up, it'll push this peanut price up too. And if it pushes the peanut price up, we're better with RP than YP. So I feel like that's a pretty safe bet for 2025. That's what I'm going to recommend you do. Moving along, keeping with the peanut theme, let's talk about new breaking ground. If we're talking about 69-cent cotton, guys, I've gotten 20 phone calls a day that says, hey, what if I plant corn? I can't stand to grow cotton at 69 cents. I'm going to lose money right off the bat because I just can't make enough pounds to break back even. So having said that, will there be more acres of peanuts? Maybe there'll be some hay ground that's coming out, maybe some pasture ground that's coming out that goes back into peanuts this year. There's a change on how we're going to handle those. So I've told you over the years in person and on video too, I'm sure, if you had a farm that had been out of rotation, hadn't produced a crop one out of the last 3 years, it was a new breaking situation. We had to get it coverage. That rule has changed for 2025, and now it's 1 out of 4 years. So they've loosened it up a little bit. So if that hay ground hasn't produced a crop in the 1 out of the last 4 cropping seasons, or that pasture hasn't, or it's land that's been laying out, so maybe some you cleaned up that you want to bring into rotation. If it hasn't had a crop on it 1 out of the last 4 years, it's called new breaking ground. And so to make it to where we can cover it, we've got to do a little bit of extra paperwork on that. It's not hard to do. And used to, 2024 and prior years, I would have told you that most times it's not worth insuring the first year and that you had the ability to waive insurance on it for the first year. That has also changed for 2025. So we can't waive insurance on it anymore. But one good thing is, instead of it taking a percent of the county yield, now it'll take 85% of your own peanut yield. So the peanut yields you've established on your other farms, this new ground, this new breaking that hasn't had a crop on it 1 out of the last 4, will come in at 85% of your peanut yield. So that's much better, but we don't have the choice to waive that insurance anymore, not in 25 moving forward. So if you're gonna bring some new ground in, you gotta let me know. I've got to do a few things before sales closing to make that work out just like it needs to be. But the coverage is a lot better than it would have been. You just have to be sure that you tell me or Amanda that you're going to have some new breaking ground, and we'll tell you exactly what we need to do. Before I wind up, I want to discuss something for you guys that have multiple entities. And so we'll use me as an example. So if I have an individual crop insurance policy in my name, it's a spousal policy. It belongs to me and Tammy. And I also have one for my LLC, so Cornelia Plantation has a crop insurance policy as well. And I would farm those as 2 separate entities, my spousal policy and then my LLC. In the past, this rule has been there, but it was just interpreted differently. And so I'm going to give you in layman's terms what the new interpretation of this rule is and how it will affect you if you're a multi-entity farmer. So it says, basically, sold production trumps certification. So what does that mean? Well, if I have a contract on my peanuts and I sell all my peanuts that are my personal peanuts and my LLC's peanuts, if I sign a contract with Golden and I sell them all to Golden and I sell them as Cornelia Plantation, I'm going to have a problem getting my individual claim paid because they're sold as Cornelia Plantation. Sold production trumps the way I certified it. So it's simple. We just got to take care of this on the front side. So if you're marketing corn, if you're signing a contract, if you're sending it to Goolsby or you're sending it to Bungie or wherever you may be contracting that corn and you have multiple entities, we need a settlement sheet by entity. Okay, so I need one for me individually, I need one for the LLC. So you need to make sure before you deliver that either they split your contract or you have multiple contracts for the acres the way they're certified, because we don't want to get in a situation where I can't pay a claim or the adjusters can't pay your claim because all the production is sold under one entity. Sell it the way you certify it and you'll have no problems at all. That'll just be smooth sailing, right? Sold production trumps certification. So remember that if you have multiple policies. Remember, we've got a couple different farmer updates in person where we're having lunch. Come, bring your neighbor. We'd love to have you there. As always, Amanda appreciates, our family appreciates your business. We're getting close, remember, on these base prices. Mid-February, we'll have all these prices determined and solid. So we'll be in touch over the next week or so to help you make the changes that you need to. If you or your banker needs anything in the meantime before myself or Amanda calls you, you have my cell number, text me, have your banker call. We'll stop what we're doing. We'll get everything you need for your crop loan. If they need past yields, we'll get those. If you need an assignment of indemnity for the bank, we'll get those taken care of too. So if you need us, call us and we'll be in touch with you. And we appreciate your business. We appreciate you trusting us for all these years. Thank you very much.